Hi, I'm Michael Taylor, and I'd like to talk to you for a moment about the 2018 tax law changes. Across the board, up and down the income scale, you're going to see your taxes impacted in 2018 by the new tax laws. They're effective January 1, 2018, so hang on, we got a lot to talk about, and we're going to try to hit a couple of the most important points in the next minute or two. First of all, tax rates are lower in 2018. We're going to see tax rates from 10% to a maximum federal tax rate of 35% for income for a single person over $500,000 and for a married couple over $600,000. Across the board, there's a 10%, 12%, 22%, 24%, 32%, 35%. We've got a variety of tax brackets, but they all are on a sliding scale from basically the first dollar of income through $500,000 or $600,000. Those lower tax rates are going to impact most taxpayers in 2018. I want to talk about the individual AMT tax, or alternative minimum tax. That is going to change dramatically in 2018. And if you've been impacted by the AMT tax previously, it's a good bet that in 2018 you won't have that burdensome tax in addition to your regular tax. One of the most important tax changes that impacts most taxpayers is the state and local tax deduction. The state and local tax deduction, you may already be aware, is limited to a $10,000 tax deduction for state and local taxes as an itemized deduction. Probably going to reduce their itemized deduction. We have run schedules for all of our tax clients, and that's over 1,500 tax clients. And we have found that 85 to 90% of our clients are going to realize real tax savings in 2018 from their 2017 tax levels. The standard deduction in 2018 is increasing. That standard deduction now includes exemptions all rolled into one number. For a single taxpayer, that's $12,000, and for a married couple, that's $24,000. And that's the same number whether you have one child or 6 kids. It doesn't matter. Your married couple standard deduction will be $24,000. That's a big change, and that's something that is going to be in conjunction with the child tax credit. In previous years, the child tax credit was limited to $1,000, generally for people who made under $110,000. In 2018 and going forward, the child tax credit doubles to $2,000, and anybody who has income below $400,000 is going to qualify for the child tax credit. We're going to see a great reduction in taxes for people in the $80,000 to $300,000 to $400,000 tax range that have children. If you have 2 or 3 kids, let's say 3 children, that's a $6,000 tax credit that you might not have qualified for in 2017. That's going to be real dollars straight to the bottom line in your tax return. We're divorced in 2018 and you signed a divorce decree in 2018, alimony is no longer deductible, but by the same token, alimony is no longer income for the recipient. That's a change that's already in place and will impact divorces going forward. Previous years, alimony was a tax deduction and was taxable income to the recipient. That is no longer the case. Miscellaneous itemized deductions is another area of the tax law that has changed dramatically. So much so that it's been eliminated. You no longer can deduct some common deductions, employee business expenses, dues, subscriptions, certain other fees were deductible as an itemized deduction. Those are no longer deductible whatsoever. The offset to that is the lower tax rates. Something very important that has changed for 2018 is the individual mandate. The actual effective date of this change is January 1, 2019. For these and many other reasons, you need to get updated and to have a one-on-one conversation with your tax person to find out how these tax changes might impact you for 2018. And we'd love to talk to you about your specific situation.